Thank you everyone for being here. I had a very interesting day so far. It's great to be talking about things like MIKA now that it's actually past the finishing line. And yeah, I think it's going to be a very interesting fireside chat. So to start off, obviously I'm Jimmie and I work as a journalist with VIXIO. So for the last few years, I've been covering MIKA and also other regulations such as PSD2. And Raj, it'd be great to get a bit of an idea to start off with about what the stuff that you do at Scallop.
Thank you, Jimmie. I'm Raj from Scallop. I'm the founder and CEO at Scallop. Scallop is a neobank based in UK. We have several licenses in Europe and different parts of the world. We are also, what we're mainly trying to do is we're trying to bring crypto to mainstream use in a very different way, unlike existing partners like Crypto.com are doing. We're trying to provide a regulated framework to Web3 people where they can access Web2 services while staying in Web3 in a more compliant manner. Yeah.
Fantastic. Thanks very much for that. So I think a good place to start with, considering the title of the fireside chat, would be what is banking on chain and what benefits do you think that it brings to the financial system?
Definitely. So, I mean, we all are sitting here and talking about compliance and regulations because existing tokens and several tokens minted on existing blockchains, they're not really, there's no KYC done, there is no PEPs, there is no sanctions, nothing is done. I mean, in the previous fire chat, Tom from Coinbase mentioned when we talk to regulators about blockchain and tokens, they say, oh, blockchain is fine, but not the tokens, because the tokens are minted on a blockchain where we don't know who minted them and who owns them. Pretty much according to the regulators and banking ecosystem, they are not properly scrutinized. So that's why, there's always a setback when we talk about the tokens. The problem is in the root, because all these tokens minted on these existing blockchains, they are not like a regulated ecosystem. So we have created a regulated ecosystem like as a blockchain with a regulatory module inside the consensus. It acts like as a hash rate bank. When users try to open a wallet on Scallop chain, it will take them through all the questions just like a hash rate bank take them. And once they pass the checks, they will get a wallet address on Scallop chain where the address happened to be an IBAN number. So by creating a regulated blockchain, it opened doors to a new world, like a bank on a chain, tokenizing of the real assets, all those things possible because the banking or the regulatory framework in the chain will do all the checks just like a high street bank does. Yeah.
Of course, and it does sound like a pretty seamless experience. I mean, certainly when you were showing me the app earlier, I was impressed by how frictionless it actually seemed to be. At the moment, certainly in Europe, wherever you go, there does seem to be a little bit of a perhaps distrust, I don't know if that'd be the right word, or skepticism from the regulators when it comes to the use of blockchain and crypto. And I wonder, how do you educate regulators about the benefits of there being this kind of seamless process and also consumers as well?
Very good question. I mean, last year it was a very bad year. I mean, after 3 arrows going down, Terra Luna and FTX, definitely consumers lost a lot of funds. So there is definitely a big mistrust of especially consumers on projects. Similarly, regulators as well. Regulators came under very high pressure because consumers are losing money. Now their first priority is make sure they're providing security to the customer funds. That's very important. At the same time, consumers wants the same as well, that there has to be some good regulations and compliance to make sure that customer funds are safe as well. So the best way is regulators has to implement right laws to make sure the projects which are building on in the blockchain industry, they are keeping the funds in, like for example the new rules. Of course, stablecoin is a very sensitive topic. Of course, MIKA is working on a very right path on it, I feel, where stablecoin, they have to peg 1:1 into a real bank account so that customer funds are safe and they can withdraw anytime, they can move it. Again, that's all because of the Terra Luna what happened. So by providing a transparency, especially, regulators and they can implement the laws and changes, and consumers can, again, we can build the trust back into the industry by following the right rules and regulations here.
Fantastic. And certainly today it's been interesting to see regulators sharing their point of view on the implementation of regulations such as MIKA, which feel very close to us now. Do you think that once the MIKA framework comes in, that maybe there will be a bit of an easier relationship, let's say, between players such as yourself and regulators when it comes to blockchain?
Definitely. What MIKA is doing, MIKA is unifying different crypto laws in different parts of the Europe. Like, by having a MIKA license, now you can passport your services to 27 countries in Europe. So it's a straight access rather than having 2 or 3 different licenses from different countries. Now it's easier. And it will also create a ease of access to different projects by getting a license. Now you can access almost 100 million users in the entire Europe. So definitely MIKA license will help a lot for sure, and especially projects by getting license. They can provide services to different people. So yeah, it's a I feel like by working with MIKA, by following MIKA regulations, it will definitely help projects to reach a lot of people in the industry. Yeah.
Fantastic. And when it comes to MIKA, are you happy with the framework that's been introduced? And would you say that it's going to be beneficial for e-money tokens, let's say, if you're in the blockchain space?
Yeah, with respect to the e-money tokens, I just want to add a bit more about how the banking on a chain, which we have done. Based on that, I can relate to that. As I mentioned before, in Scallop chain, which is a regulatory framework, people usually ask about what is meant by a regulated chain, what is the baseline policies and compliance for it. At the moment, we are following FCA, but when MIKA rules comes in place from December 26, we will make MIKA policies as a baseline from rest of the people. That's how it will help us. And as a result, when, as I mentioned before, customers will get IBAN accounts on Scallop chain, when user send, let's say, 1,000 euros to that IBAN, the chain immediately creates 1,000 euros, which are the e-money tokens, 1:1, to the real currency in a real bank, which is kept in a centralized bank in the Europe. So it will make life easy for people to move their funds one place. Again, user can move the funds from OX to OX. The real funds are moving from IBAN to IBAN. It's a very hard-pegged 1:1. So this is one of the example, as I'm trying to say, that MIKA new rules will help a lot for us to especially bring the fiat side of the world into the Web3 world easily. So all the users, existing projects in the Web3 can access Web2 services seamlessly on a Web3 blockchain. Yeah.
Absolutely. And do you think that there will be more take up from consumers once MIKA comes into place? Do you think, obviously you mentioned things like FTX, which were definitely an issue and did create some distrust. And I guess it would be good to know, having that legal framework there, do you think that will be beneficial to consumers in actually getting them on board with using solutions that do bring them a lot of benefits and are very seamless, such as with blockchain and with crypto?
Definitely. Consumers always looks for safety of their funds, where the funds are stored. Number one, custody. What kind of custody it is centralized or decentralized. We have several centralized custodies available. Now, when it comes to the crypto, it's always stored in a custody. So by implementing proper custody compliance rules and licenses, definitely consumers will be able, but again, where they are stored, are they are safeguarded by anybody, are they are insured? Similarly, when it comes to the fiat as well, when exchanges, when it comes to the exchanges we're talking about, when people selling their crypto, they're getting cash. But again, we need to understand with certain exchanges we're talking about, when they sell USDT to a fiat or a BTC or ETH to a fiat, the fiat is also stored in the exchange custody. So we're talking about 2 types of custody, both crypto and fiat. So if the consumer is, as per transparency, they know where the funds are, whether they are properly stored in a bank account or in a proper custody, whether they are insured or not. If all the details are clearly given out, yes, consumers will definitely come back and then they use the services. They only want whether their funds are safe or not. That's the main thing. Yeah.
Fantastic. And one of the things that certainly I saw happen a few years ago now was a real panic in the blockchain industry in Europe about the introduction of the travel rule. I think the travel rule obviously now has been passed into law through the transfer of funds regulation. And it'd be interesting to know, how much of a worry is this, and how can it be navigated? Because there is a bit of a, I guess, clash, or at least it seemed, when I've covered it in the past, between the GDPR and then the travel rule requirements. So yeah, it'd be interesting to get your point of view on that.
Travel rule is very important. I mean, we have travel rule in fintech industry for a very long time. When you take, let's take UK banking system, whenever you add a beneficiary, you add a sort code account number, again, in the IBAN as well, it's there, and you add a name. We check whether the name matches or not. It's very important to make sure that you're sending funds to the, not only the right person, but also are you sending it to sanctioned people or not? It's all about AML, whether we're checking it or not every time. That's very important. It's there in fintech, but it is also needed in crypto because a lot of money laundering is happening. That's the main reason why we all are here. So AML checks also should be done in crypto. That's why travel rule is being recommended a lot of time. I mean, again, I think MIKA is also working on it. But to check it, there are some issues out there because especially decentralized wallets, we don't know who own them. Now, I think in Singapore and Canada, I think in some apps are asking users when they send over $1,000, they're asking like to whom you're sending, but people are just adding names like Mickey Mouse, Donald Duck. I mean, there are no checks out there, but I'm hoping MIKA, when the rules comes in end of next year at some point of time, where there will be a certain kind of a travel API where centralized exchanges, as per GDPR, they don't have to disclose the names, just like how, as I mentioned before, UK government is doing. If an app has to become a travel compliant, I'm expecting down the line in 2 to 3 years, it will come where they can add an address, I mean, in the sender, they can paste an address, they can put a name like Raj Bagadi, and it will ping the centralized exchanges who are contributing to MIKA travel rule. It will ask them whether the address is matching to the name. If it is matches, money will go. If it is not, it will fail. That makes the app travel compliant. It is necessary, I believe, coming from being myself an AML specialist, because that way we can even further reduce the using of the funds in dark webs or areas, or in even in terrorist funding. All those things can be stopped. I'm hoping travel rule plays a very major role in blockchain industry as well.
Fantastic. And it sounds so far like you're particularly positive about the introduction of the regulation for crypto. Do you think that regulation can be seen as an opportunity? I know that lots of people in the crypto world maybe aren't the most enthusiastic about suddenly having to deal with a load of regulation. So it'd be good to know, how can they see this regulation as a good thing, as an opportunity?
It is, in a way, it will, first of all, there is a lot of distrust in the industry after what happened last year, as I mentioned before. There are a lot of projects out there. As I mentioned before, when you talk about tokens to regulators, people always get afraid of, I mean, what kind of token it is, what is it? There are no name, no founders, no project, no details. So definitely there's a lot of distrust. I mean, blockchain is a fantastic technology. It can be used in different ways. For example, in banking, several big banks like JP Morgan using it. Several people in the banking industry already using it, and brought this, they brought the cross-border payments into seconds. It used to be like days a long time ago. So it's a good technology. It can be used for a lot of good things, but because of what's happening in the blockchain industry, there's a lot of distrust. So regulations will, slowly, by implementing the new rules, new compliance rules and everything, making sure scrutinizing the projects and everything, I think, it is very much needed, which will filter out all these bad things in the industry, and then blockchain eventually will become like as a fintech world what we have right now. That's why regulations are very, very much needed. Yeah.
Fantastic. And you mentioned there some of the banks who are already engaging with blockchain. I think it'd be really good if you could discuss some of the use cases that you've noticed. Are there actually any of like the kind of more established banks that are banking on chain?
So, I mean, when we talk about blockchain in fintech, when we talk about the banking blockchain in a banking industry, as I mentioned, cross-border payments, it's a very, very important area. For example, Ripple doing a fantastic work in this place. They solved some of the big problems as well, and JP Morgan is also using it. So blockchain, by bringing tokenizing the real assets, tokenizing the fiat, tokenizing bonds and everything, can make the movement of these assets very quicker between cross borders, and that's where it can be used in the future. Yeah.
Absolutely. And in the present, are there any particular methods such as tokenizing bonds that are really taking off at the moment? You know, have you seen anything that's really kind of gathering momentum, or is it more kind of a case of looking towards the future?
Well, tokenizing real assets or issuing any kind of financially fintech-based products on a blockchain, there's a big problem here, which is we need to know who to whom we are issuing. That is what, first of all, okay. When we talk about the shares, before a company issues shares, they drop down all the details and they know, okay, he's the person, he's his address, and everything. I'm talking about KYC and AML, PEPs, and sanctions. So that's one of the big problem why REITs are not being that popular in blockchain so far, because those kind of services are not exist, because it's all anonymous right now. So once that issue is resolved, I think, yes, more of these real world assets coming into the blockchain will pick up, because now there is an option to do KYC, AML, PEPs, and sanctions. So it can be done. So I think we need a shift in the system where we need more checks, more compliance checks in the blockchain industry, and that will pave a way to bring real world or Web2 or fintech products into the blockchain world. Yeah.
Nice. Well, Raj, it was a pleasure to speak. And I think that it's a really interesting area. There's a lot of opportunity there. And I hope that everyone else has a fantastic time at the conference. I'm here the next 2 days and very keen to meet with more people.
Thank you, Jimmie. Thank you very much. Thank you, everyone. Cheers.